We're discussing how to build $1 billion startup almost overnight, number 7 today. If you are missing number 6, there is a reason. After videoing the number 6, I decided to keep it for myself. Sorry, and I'm actually using it. So you're not going to be able to see number 6. But you know, I've given you enough of these different ways of looking at markets for you to look at your own markets and hopefully trigger some thoughts on how you can build your own $1 billion startup. So number 6, I can't show it to you right now, and we'll go to number 7. But before we even go into any more graphs or looking at how different markets accelerate, I want to kind of go through the simple mathematics of building a $1 billion startup. And there's 2 ways to do it. One is based on reality, and the other one is based on market hype. And if you lived in Silicon Valley, you've seen this one a lot, okay? And I have lived in Silicon Valley, and I've seen this one a lot. But reality really comes down to simple mathematics. And so if you want to reach a $1 billion status, of course, the easiest way to do it is by building a $1 billion company in terms of sales. So if we assume that approach, then you're going to have basically a scenario of price times unit equals $1 billion, which in scientific terminology is 1 times 10 to the 9th. So if you built a really cool product and it's digital maybe and it's really cheap and everybody could use it, you could charge a simple $1 for your product. Let's say it's an app, and now you could charge 1 billion people 1 times 10 to the 9th. Okay, you could charge them you could charge 1 billion people, and you would get the same result. Okay. Now, another way to look at it is that if you have a product or service where you can charge $1 every month, so now it's $12. Of course, your dynamics change. Now you don't have to sell to 1 billion people to get to $1 billion in sales. So that's one way to look at it. If you have a product that actually costs a service that costs more than $1, and now you kind of have a feel that you could actually charge $10, okay? Now all you have to do is sell 100 million people, okay? And you get to the same results. Now, if once again you get a person to pay $10 per month, which is $120 a year, then this number obviously changes. So what you have to do is you have to look at it from in terms of pricing times units and how frequently the purchase is going to happen. Obviously, what you want to do is get to the point where you have heavy users buying your product on a monthly basis or weekly basis or daily basis, whatever that is. But in reality, what's going to happen is, I have to tell you, there's no market out there that doesn't end up being segmented into freemium, light, medium, and heavy users. So those are the 4 components of a market, because if you're offering your digital service for free, you're going to have X amount of people that are always going to use it for free because they're cheapskates. I'm kidding. But you're going to have people that are just going to use the free component of it and never use anything else again. And then you have to figure out how to monetize that. And then you might have people that will use it on a light, medium, and heavy basis, and hopefully you can monetize that as well, besides just selling the eyeballs to advertisers. So if you go at the $10 approach, then you have to sell obviously 100 million people to get to $1 billion. If you go the $100 approach, then all you do is you just take 1 0 down, and then 1, 2, 3, 4, 5, 6, 7. Okay? So you have to sell now 10 million people $100 to reach $1 billion. If you want to sell a product for $1,000, now what you have to do is you have to sell 1 million people to get to that amount. So really what it comes down to is that if you have a product that you want to sell at $1 million, then what you have to do is you have to obviously sell 1,000 people to get to $1 billion. So it is simple math, but I think it's a good exercise because at the end of the day you got to charge something. Now this type of a pricing simple formula is really what you have to look at. So if you are looking at building a $1 billion startup in terms of sales, then once again we're going to go back. I cheated. If you go to the market, YX, and this is size, and this is market X, then obviously as the market goes up, whatever stage you're at, you have to make sure that the number of potential customers is large enough. Now, this may sound like common sense, but you'd be surprised how many entrepreneurs do not really evaluate the size of their market in terms of where they want to go. And so you've got to look at that. So if your market is a large market, then obviously you have the potential to monetize it. So for instance, because there are billions of smartphones out there in the marketplace, now you can play the dollar game. If I have an app that is so incredible, I can charge $1 and make it on the volume, as an example. The other component of it is that you can look at it from a different perspective. You can look at it from a market hype perspective. Let's say that you're really not interested in generating $1 billion in revenues. I know I'm being sort of sarcastic a little bit, but bear with me for a moment. If you're really, it's going to take a long time for you to build a market sales. You can obviously ride the market hype. So obviously market hype is going to depend on type of market. Okay. Another component of it is the market momentum. And the reason I say that is that if you're in a really hot market and depending of course on the type of a market and whether it has the momentum, you can literally raise a lot of money based on very large valuations. That's what you see in the high-tech sector, especially social media. Okay. The other component is timing. You could be in a great market, everything could be perfect, but if Wall Street, as an example, is if the market on Wall Street is going downwards, then timing could affect the valuation of your company valuation. So the other component is customer acquisition. And if you are acquiring paying customers, obviously the velocity or the acceleration of that is going to affect your valuation. So if you started slow, but all of a sudden the acceleration of people buying your product is increasing at a very rapid pace, then what you can do is you can use that market momentum to evaluate your company at a much higher price. And I talk about this actually in Entrepreneur Myth, the Startup Reality, where the myth is valuation is based on numbers. Because if you're evaluating your company, you really, yes, you could use the simple mathematics to evaluate certain components of your startup value, but by the same token, you might want to use the value of all these different variables that I just stated here to give you $1 billion valuation. And of course, the freemium users. This has been one of the greatest ways to build a $1 billion startup almost overnight. If you look at Facebook, if you look at Twitter, if you look at LinkedIn, and you compare the valuation, okay, on one axis versus sales, you're going to see that they don't match up. Okay, this is $1 billion here in sales and $1 billion valuation here. I assure you that the correlation was not here. You know, they didn't hit $1 billion in sales to get $1 billion valuation. It was a different mechanics being played out. And the reason is because the whole objective was that if I have a person that has 2 eyeballs, then even if they're using my service for free, I can monetize their eyeballs through advertising. And then what it comes down to is comparables. And that's another thing I want to point out, is that if you're in a business where you use freemium as your business model, where the sales are obviously not going to be there, then of course you're going to use advertising eventually as your revenue stream, and then you're going to be compared to something else. And that's something else in the case of Facebook or Twitter. LinkedIn not so much, because their model, in my opinion, is much more powerful, is compared to some media. Because in reality, they are using advertising as a monetization vector to get their money. So bottom line is that that's another way to look at it. So what I want to give you an example here is that if you're trying to build a billion-dollar startup, you have to keep in mind that whatever the market is, however way it's evolving, you have to make sure that the size of that market, if anything, I need to bring that up to the forefront again, is that market size is critical. And this is why VCs love startups that are attacking a problem, some type of a problem that the people need to have solved, but it's operating in a large market size. So for instance, this is VC fundable. Okay, I have had entrepreneurs come and pitch me on what I call lifestyle businesses, and I write about that in Entrepreneur Myths. Okay, this is not going to get me there because the market size is not large enough, so I'm not going to get my ROI. It's great for you. I mean, if you make $10 million a year, that's fantastic. But how am I going to get my money back if I put in $10 million into your business that only has the potential of doing $20, $30 million in revenues over 5 years? And so the other component also that I just thought about, ironically, is that margin. If I made $100 million, but my margin is 5%, well, that's really not that great. And I actually know some businesses that have gone from 0 to $1 billion almost overnight, but their margin is really not that high. So yeah, it's great money, but it's really not that great in terms of what you take to the bottom line. So if you can design businesses where even if the revenues end up being $100 million, but let's say the margin is 50%. So now you're at 50 million, okay? And if you do a, you know, when it comes to evaluation of billion-dollar startups, they do a lot of market standard relative comparisons. So if you're in a media business or whatever business you are in, they're basically going to say, okay, this company took 50, this is just simple, but you know, there's a lot of different factors that come into it, but I'm going to make it simple. If the company's pulling in 50 million to the bottom line, then they just do some multiplier. Okay, so they're going to multiply it by 10x as an example. So now it's worth 500 million. If you're going to sell it. A lot of times what I've seen is in very, high fast growth industries, you're going to see 20x to 30x. And that's how you can build a billion-dollar startup almost overnight using market hype. Simple math, it really depends on which way you want to go. And it comes down to what price do you want to sell your product or service, and to how many customers. And make sure that if you get anything out of my message here, is that one way to decrease the number of customers you want to sell to is if you design products or services where it gives you recurring revenue streams. Until next time.